Good morning, everybody. So we have it's Friday. Kind of question I'm thinking, is this a new buying opportunity with the markets up here a bit and having held the prior low, or just continuation of a topping pattern? I think maybe we'll get enough information today to have a better perception of that. So as far as SPX goes, today, zero data expiration. There is premium up here in this area, which I think is getting far enough away. We'll see what happens here at the open. But 39.65, it's not great, but sometimes less is better. You could go 39.60, which is going to be right at the top here. I don't think it's going to make a new high today. But you have to get relatively close here to get some decent premium. 65 is going to be less. You can go whatever, 10, 15 wide. And you might be saying, well, how can you go 10, 15 wide on that? Well, in my opinion, if you're going to do these credit spreads, you have to have a pretty strong belief that it's virtually impossible that you're going to get hit. I know it's possible because I felt the pain. But you have to perceive the pattern one in which that, traders saying go 25 wide, sure. 39.50 call wall. Probably so. 39.50. Yeah. So 39.60 for me would be safer. Just give me 1 second here. Okay. All right. So on the downside, we could possibly get 38.80. I am always looking for what's potentially a no-brainer. There's actually juice down there. Jeez. Go to 38.65. Jeez. And when we look at the futures, there may be a better point in time to put that on. And the call side may be necessary to do relatively close to the open. So let's go to the futures here. What you can see, they're right up near yesterday's high and up into this resistance area. And they've begun to stall. Look at the 5-minute little breakout bar failure right there and coming up under the prior pivot low. Now, of course, this is a 5-minute chart and things can just pop right back up again. It's in an uptrend. So you could see here on the 60, it took several hours, coming up into the resistance area before actually buyers lost confidence in what was happening there. And then prices started to drop. And then, of course, the retest that happened yesterday afternoon and back up. So prices have been in a trading range, which you can see perfectly clear on the daily chart. Now, whether this holds as a bottoming tail bar. Excuse me 1 second. Okay. Yeah. So whether this ends the day like this, it rarely does without, it's just not going to stay here all day. It may dip down and goes higher, but I don't think it's going much higher than this. That's why I think the credit spread, the call side of it, doing it early on, Pierre, I don't think it's going up above 39.60. 39.25 close today. Oh, now you're going to know the close at this time? Come on, McGraw. You're getting too close to the rabbit hole there. Okay, per the gamma. It's interesting. We'll see where it ends up. But anyway, look, look at what's happening. As I said in the room the other day, look what's going on here lately. You know, I mean, we're talking about a trading range, but look at the markets now for a week and a half. Basically in the same place. So, McGraw, for me, trying to call something within a point is close to, the Holy Grail, and the Fibonacci got people with their decimalization and, all of that kind of stuff. But I get it, what you're looking at. So, I mean, you don't need a gamma ray gun and all that to have a bias that things are going to stay within a trading range. Where they end up within that trading range, we'll all see it at the end of the day. Point being, it's in a trading range, and trade the range. And as far as credit spread goes, up above the range should be safe, and down below the range should be safe. Considering prices are getting closer to the upper part of the range, the early on part of the day, do the call spread. And then if it sells off, do the put spread. And maybe it probably bounces up from there, and we go out within the trading range. So whether it's wherever it is, um, you know, I hear you, McGraw, and we appreciate you sharing that. We're a team here in the green room, and the combination of strategies. I found it interesting, what you've shared. I just reluctant. I don't want people to get, you know, people find other things interesting, but keeping in perspective that it's prices that we trade, and support and resistance and trends. If we can actually find something. So as far as options go, um, how much of that is really helpful, as opposed to, I come to pretty close to the same conclusions just looking at the ranges and open interest within those options. And I come pretty close to what you're looking at with, you know, a simple approach, which is always my goal, is to simplify for myself and everyone that comes to Master Trader. So let's keep going here, because I don't want to take all the dance time. All right. So we pretty much, it's been the way of whether, the Qs lead a little bit, and at different times, the Russell showing some weakness or strength. Things are pretty much the same, sideways chop. Buyers show up on the dip. They've been relentless. And what we're going to see, I think, and I don't know what is going to be the moving factor next week, but how long can we go sideways where, we've gotten this choppy sideways action, and, yesterday prices broke down, getting further, like they were going to go down to the next level, and they popped back up again, and buyers on the retest, and now it's up here. And so it's just been, sloppy chop, back and forth. And sometimes it's really can play havoc with investors and traders that don't have in perspective of, what we're dealing with. So, during a time like this where things are trending, and you hold on to positions, or you buy some dip in a particular stock and it works out fabulously well, and then all of a sudden, you're getting sliced and diced, you know recognizing that an environment is changing is of a great benefit of not getting the frog in the blender, as we call it. So anyway, same scenario here in the Qs, coming up into resistance. We've got this little red bar starting a little corrective price action here. Probably pops back up, and we'll see what happens here at the open. Dow. John, was Yellen interview really news? Seems to be what the White House has been saying. Should it affect the market? I really couldn't say, John, because I didn't listen to what the woman had to say. The Fed's not going to do anything. So it's just yakety yak. Um, More sideways price action. You can visualize the closing prices, sideways, up a little, down a little, sideways. And so as I look at this and think about symmetry within patterns, which sometimes plays out, kind of suggests, you know, a couple of days going sideways here. Maybe there's more earnings come out. And I spoke earlier in the week when things are in an uptrend and things start going sideways, you know, you have to have a bias that the trend can continue. And as they go sideways here, as I also said, if they don't, it'll create a downdraft into this void. You see, there's more bottoming tails than topping tails. So buyers believe buy the dip, it's worked, and it should go up. So if it doesn't, that's in essence, what we call shock patterns. Jake's asking me about breadth and sentiment, which now this is interesting. And it reinforces how markets change, and you have to start carefully attempting to make some adjustments to what you view historically. And this is strange. And I'm sharing this because this was one of my thoughts this morning as I was reviewing things, was that, do I view sentiment as being oversold isn't the right term, but having reached a bullish level, that it's come down to what's historically a bearish level because it's been staying up here, where breadth has come down close to a bullish level during this corrective process here. It hasn't gone under 100. So I don't know. But as I look at this, one of my thoughts was this morning, do I view this as where the market is near a new buying opportunity? And I would never think such that in the past. And I'm talking about decades of looking at information and how I use these tools. So is it different this time? Hesitant to even think such a thing. I mean, it's somewhat different, but at some point, this market is going to correct. That we know to be 100% what's going to happen. When it's going to happen, these internals tell us the proximity of when it's going to happen. And so, reaching these levels here as an extreme, the market has corrected. It just been sideways, which just historically can happen as well. And now that this has gotten close to here, would have would have preferred that the markets were lower this morning instead of up, and maybe a little down day where this would have come down below here. And then, prices come down a little bit more. And, the ideal scenario is, buy a pullback. And now there hasn't been any pullback. So do we buy a breakout? Well, this isn't a very enticing pattern to be thinking about buying a breakout with all these tails and whipping back and forth. So it is not a very great market environment for the moment. Russell, this is getting more interesting. Pulling back within an uptrend. This is, as it pulled back to minor support, the rising 20 MA, getting a green bar now. And so the ideal pattern, obviously, well, a green close. And, if we had our wishes where it would say, well, what would be the ideal type of pattern? Now it would be another day of sideways price action to, build this intraday base up here to now start a new uptrend, which, obviously another day would put us into Tuesday of next week. Now we've got this squared top here. So I don't think today's going very far either. And you can see this is coming up to some resistance as well. So no matter where we look, I'm pretty much coming to the same conclusion as to no great expectation for large price movement in the broader equity markets. Bonds continue their descent into the support area that we've been looking at for months, for them to come down to as a target, continue to weaken. Oil's a little weaker, and the momentum is slowed. Right? So when we see slowing momentum, indicator aficionados would call this a bearish divergence. Unless they get very confused as they look at those things and they don't always match up, but we simply just look at the momentum of price movement. So as prices moved out of this consolidation, they had good momentum and they pulled back, what was known as a bull flag, wide range bar, great momentum again. And now it moves up and you get a red bar, and the distance between the corrective highs has narrowed. So momentum is slowing. Depending on your oscillator, you would see a bearish divergence of a lower high in the oscillator. We just look at it in this simple way. You don't need oscillators. Right? Someone's asking me on YouTube, on the 6th, the all indices have W bottoms and are coming to 100% retracement, so I suppose they will stall. Is that in M setting up on the daily time frame? Possibly. So can this be an M? Yeah, I spoke about that sometime this week, but look, this could, if this was to say pop up here, let's say it did continue to go higher, right? And it came up to this area and formed another topping tail, or if that happens on Monday and we saw maybe a gap up on Monday and a big red bar back down, that would be an M top. Now, then it's got to break the middle, the consolidation here. So we could think that that's a possibility, of course, but we can't trade possibilities until they become reality. So could it be an M top? It might be. We'll see next week. But it's a good thought to question what possibilities are when you look at patterns. But it can be a problem for those that want to execute on their beliefs before they become reality. And those tend to be what we call impulse trades. And typically they don't work out very well. Gold, trying to make the turn down here. All right. We shall see. All right. It's down here at this pivot low. If this can make a turn, we're going to want to get long this. I know it's in a downtrend, but monthly's in an uptrend, and we're waiting. Right? We've been waiting. Remember, I said over here, if this could actually turn around, this was like around, about here, right? We could get a failure of a sell setup, and obviously that didn't happen. That turned out to be a very nice short-term sell setup down into support. And silver has been showing relative strength. Nice. This isn't done yet, but I love that bar. We'll see where it closes today. This is what we call a correction bar. It took out all these lows and it came down, looked to the left at the pivot, hit the 50, simple 50. And if this closes like that, maybe gold gets turned around, but we'll go to silver, right? Because it's been showing relative strength. Like that a lot.
Greg, here's if go back there. If that tail is real, go back to silver. My SLV ETF does not show that whatsoever for obvious reasons. Sure. But that's my point, is if that tail is real,
it looks real.
That's an example of a fantastic additional information that you get from futures that you don't on ETFs.
Yeah, and you know what, Dan? You've heard me talk about trading the equity futures and how the overnight is kind of a double-edged sword. It's good information, but because I look at what I call the day chart and I combine the 24-hour, with the day chart when they're out of alignment, which tends to be early on. Things are, for me, kind of confusing. And because I historically, I see that things are choppy when those, the day chart and the 24-hour chart are out of alignment. So that could, be a similar type of thing with SLV. I haven't looked at it. I'm glad you brought it up. But so let's, this is trading up, went up to 25.60. So it's gapping up here. So assuming it holds on to the gap, we'll come, to the same conclusion at the end of the day, assuming it holds on, since it's gapping up above this range here. So we'll see. But anyway, silver's looking pretty good. We'll see at the end of the day. And maybe, it's going to be worthwhile taking a position near the close today, if it can hold on to the gain. And backing off trading range, top of the range, bottom of the range. So running in place all over the markets, and we'll see how things turn up. So I've yacked too long, Dan. You've got 6 minutes to cover your stuff.
Yeah, no worries. All our opens are fine. I've got a number of credit spreads expiring today. Profits, so everything's fine. Let's go right to gappers. This one, DT, we entered into the close yesterday. Beautiful, beautiful turn here. Bullish weekly, it's gapping up, so I'm not going to chase it. We'll look to add on the pullback. Riot, the blockchain, making new highs, Bitcoin new highs. No patterns here though. Craig, remember we were tempted to sell the $100 calls on this yesterday? Or I forget, it was something crazy like $4 or something.
Yeah.
One day of risk. And, we just thought we wanted to do a spread, but they didn't have anything higher than 100. I could sell this moon. I'm going by the ticker, so I looked at it. Never heard of this thing. Moon, I like the symbol, but it had a little breakout failure and gap down. It looks a little toppy. This thing gapping up 750. Now, you know how I always like asking folks in the green room, what is the most amazing no-brainer setup you see as fast as possible within a half second? What does your eye see? And mine is right here. Look at this wide range igniting, 1, 2, 3, price void. That was your El Fuego entry right there. Wow, that was beautiful. Austin, no, we took our money yesterday. Futu, this thing's been this thing gaps huge every day. We'll keep an eye on it. Via, look at this. Here's the turn. So, Greg, maybe that should be an MT live sometime. I'm working on the one for next week called, what's better, A or B. And I got a lot of great examples that we've been talking about recently, and in a number of them. But look at that's a beautiful turn right there.
Yeah. So, Dan, one of the things that I've seen intraday, end of day, is that, back in the 90s where we used to trade, even buy it, we called it an early entry, I forget what it was, and we'd buy above the high of the red bar, an anticipatory entry. And then, of course, if we had the green bar next to the red bar, or a bottoming tail bar, and so on. And so you could have a 2-bar type of reversal, or a 1-bar type of reversal. And I've just found that, in the markets today, and, with algos and all of that, that has a lower tendency of working, because we used to trade with the tight stops and it worked. Where that doesn't work so well today. And if you can have a 3 or 4-bar type of reversal, like what you were showing there, that is the money, so.
But we also like potent ones, like on Delta Tango. So this had a gap negated range expansion. with a bullish weekly. But yeah, so we'll have to work on a MT live on that too. And JFU for Emmanuel 334. I mean, percentage wise, that's a pretty big gap, although it's holding up okay. And BRCX kind of sounds like a bio to me. $11, 30-minute high would be okay. Cargo, CGRO. Yeah, that one's been going sideways for a while, and the gap's not too big. Yeah, maybe 5, 10, 15, 30-minute high. I don't know. But that looks higher. I'll put that in a little window right here. SAM IDEX, $4. Had a deep retracement. I wouldn't swing that, but see if it sets up for a day trade. QTRX. I can't tell where it's gapping, but strong uptrend, daily, weekly, monthly. Let me continue here. Twilio had earnings yesterday, big gap up. Today they announced they're going to do a secondary offering. And my first reaction to that was, what interesting timing. It's like you purposely wanted the stock to gap up to all-time highs to kind of lessen the blow of what they knew would typically is bearish news, a secondary offering. Now it looks like a little day trade short here. 15, 30-minute low. Looks like a day trade scalp short, but it's a little bear island reversal now. Hershey. Yeah, 15-minute high. I like the gap reversal, bullish close. Not going to rush into it, but it's a watch. Tesla, someone's asking. 0 DTE day, so let's be on the lookout for that. Call or put spreads. Tesla's really no pattern at all. Made lower lows, lower highs, bounced off the 50 inside day, gapping up. There's nothing high probability there to me at all. LOW, I liked it as a long, but it has earnings next week. B-Fly.
Net cloud is coming off a bottom here. See what it does today. NET was cloud flare.
AMT. Who?
NET. Now it's been like 4 days down there on the 50 MA. It's early. We'll see what it does.
Natalia Murphy. Yeah, that's a breakout. If Debbie were here, she would teach you how to pronounce ascending. Debbie, beautiful ascending triangle right there. It looks good, Natalia. I just don't trade within its all-time highs. I don't trade in the first 5 minutes.